George, what industry dynamics or company-specific factors are affecting the way you invest this year?
Sure. So with the Penn Mutual 1847 Income Fund, we can buy stocks and bonds. And what's really impacting us this year is the fact that we're focused on cycles. We're trying to stay away from the peaks in cycles right now because a lot of those names are starting to roll over. And we're focusing more on sustainable income, sustainable levels of yield.
And you watch the cost of capital very closely and really has been jumping up and down. How is that affecting the way you invest?
Hugely. So it affects us all the time. So our process is pretty timeless, even though the day-to-day factors tend to change a lot. What we're focused on are companies that have significant pricing power, again, good balance sheets, good management teams that have managed these businesses through a full cycle.
How do you ensure your shareholders get the proper mix of yield and capital appreciation? Because sometimes they work against each other.
You're 100% right. Usually the highest yielding securities are not necessarily the safest securities. So our focus on providing sustainable yield along with companies that, again, can produce well through a full cycle is very important. The holy grail is to not lose money, though, for investors. So to lose less in the down market is really important to us.
Value stocks have not done well over the past few years. They've really been beaten up by growth. That may be changing with the recent market downturn. That said, how do you pick the right value stocks, and what's your outlook for value?
You're 100% right, because value stocks have been value trapped for the most part, for the better part of the past few years. Growth stocks that have done well, they've done well because they've grown. They've grown earnings and they've grown sales. So the trick is to find cheap companies that can also grow sales and can also grow their bottom line. So we are finding some value in small cap names, for example, and convertible bonds and preferred stocks.
And how are you managing the volatility? Because we have seen the VIX step up from a very subdued below 15, and now we're tinkering with 20.
So in today's environment, we do have an elevated level of cash. Once we see markets get a little expensive, we tend to pare back our investments. So the cash right now for us does one of two things. Number one, it provides some stability, and then it gives us dry powder to deploy that capital into good investments that fall.
And then finally, for those playing at home, how do you pick stocks when it comes to finding value names with solid competitive advantages?
Sure. So we look at Porter's 5 Forces, which is a critical component of identifying companies that can have sustainable return on capital through the cycle versus the ones that do not. The pure essence of it is to find companies that have pricing power, companies that can respond to the higher cost that we're seeing today, and that can pass it along to their customers.
All right. Well, thanks for coming on and talking about it.
Thank you, Greg.